What is going on, Alpha Hunters? The markets are closed for the week of April the 6th. I actually waited to record this on Friday because I was looking for some information that was going to come out today. So I just decided to wait and see what kind of information we got. But we're going to make it quick so you can get back to enjoying your long weekend. So this past Monday, we did have a very subtle little gap down compared to last Friday, but nothing major. Traded a little bit higher, sold off, kind of just chopped around for most of the day. Monday ended on a little bit more of a positivity note as it just kind of traded higher. Tuesday came out a little bit of a gap up and then it just traded down for really the first couple hours, first two and a half hours or so. And then basically just chopped around for the rest of the day. Didn't really do too much after that. Wednesday, traded a little bit lower and then tried to bounce as we kind of went into the close the past couple hours. Not really anything crazy there. And then Thursday had a little bit of a gap down, a little bit of a lower break from Wednesday, and then just kind of traded higher then for the, after the past first hour of the day, and then basically just kind of ended the day kind of choppy. So really there wasn't too much major news or new data that kind of came out this week. Really a lot of the big data that came out this week actually came out last weekend before Monday actually opened, and it kind of revolved around some OPEC stuff, so we can take a look at that here in just a second. So taking a look here at sector performance for the week, you can see here this purple line, the XLE. You can see Monday, that gap up it kind of had. Let me minimize that. The XLE kind of just had that huge gap up. And really, it didn't do too much the rest of the week. It was mostly just, Monday. And really, the news that came out that OPEC Plus was going to cut 1 million barrels per day of production. And I believe that was going to start in May. So yeah, energy stocks getting quite a bit of uplift on that. And if you do want to go take a look at crude oil, go take a look at crude oil. It had quite a bit of a jump also on Monday. But then for the rest of the sectors for the week, you think that, energy's getting off to a huge lead like that. You'd think they end out in the top spot, but they didn't. Utilities actually fought back the whole week and took the top spot. So utilities, healthcare, top two spots, then energies, and then the XLC communications, staples up there in the top five. And then we had the financials, real estate, materials, and tech kind of lagging behind a little bit. Discretionary, XLY, and the XLI industrials. So it wasn't really too much of a risk on week. And over the past 2 weeks, I'm going to zoom out here. Over the past couple of weeks here, we've actually seen, I know tech has been getting a lot of the news, but from really the past 2 weeks, the risk on areas, tech, discretionaries, not really kind of leading in the past 2 weeks, even though they were breaking out over past several monthly highs and stuff like that. And we'll take a little bit more look at the Qs here in a bit, but they weren't really leading over the past 2 weeks while the market was really moving quite a bit higher. Utilities, energies, obviously were killing it over the past 2 weeks, and, healthcare. So I know there's a lot of talk right now about tech and their continued push higher for highs, but it's not like they're having strong moves in these breakout periods here over the past 2 weeks. They've really been kind of more on the weaker side. So it's just kind of an interesting thing to see possibly as we go into next week and even the week after, see what kind of happens here for the next part of April. All right, so take a look here at week over week option change. And we can see a lot of put buying out here on the May 19th. Now, I did look at these. These were mostly like out of the money, down like the 340 to 350 area. So a lot of these were pretty far out of the money. May 12th, also a lot of option buying. And really about the only expiration out there that there was more call buying was really this May 5th one. So still a lot more puts being bought. All right, take a look here at the VIX. Nice little gap up this week. Probably a lot of this had to do with the oil issue that we had coming into Monday. Didn't really do too much. Had a little bit of a lower low over last week, but nothing too crazy there as far as the VIX. The dollar, the DXY here, nice little lower retest, trying to rally here in the later parts of the week. We'll see if it could break above or if it just is about to break down and just roll down and break this support level. So we'll find out, but this will be a pretty major support level here currently for the 101 level here on the DXY. The 10-year yields, man, I mean, they just dropped pretty much every day this week. Kind of were making some new lows, but just a bunch of wicks down there. They didn't really hold down there. And then Friday in the non-stock trading session, no futures were still trading. They rallied pretty hard. So we'll see if that continues as we get into Monday when everybody's kind of back in the office and all the trading is kind of active again. So we'll see if that kind of continues to push higher, or if that was just light trading volume day and then it's going to break down. Taking here at the 10 2-year inversion, still just kind of in this choppy range, consolidating. We'll see if it breaks down or it's just going to continue to chop sideways, consolidate, and then push back towards the zero line or the non-inverted line. Take a look here at GLD or gold. Just continue to push higher here, breaking above March highs. Nice little pullback in the latter part of the week. And we'll see what kind of comes out of gold and some of the stuff moving on Monday. HYG, nice little pull down. Looks like it's trying to bounce here. Didn't quite hold the engulfing body here as the market closed on Thursday. So it might just consolidate here for a little bit and then determine if it wants to continue to push higher, or if it wants to break down. But yeah, nice little move there on Thursday on the HYG. LQD though, it was more of just the steadiness of the LQD here over the past month and a half. The HYG had been a lot more volatile. LQD not as volatile, just trending in that upper direction. A lot of people probably just looking for safety plays, not trying to get too crazy on some things. Now, what's interesting here on the LQD is you are kind of in an area where you could say you got a shoulder, neckline, head that we hit at the beginning of February, neckline. You're kind of at that shoulder area again, possibly. And we've had I know we've had a pretty good run here, but it is one that it's taken a while to kind of get up here. So it kind of seems like it's a little bit exhausted, and we might see this break down. But we'll see. We'll see how that goes. Okay, so last week I talked a little bit about this Federal Reserve balance sheet, basically assets, and this WRESBAL ticker symbol that is in TradingView. And this is what seems to be like tracking a lot of basically flows of the stock market for the most part, really over the past year and a half. You could probably even say longer than that. But what was really interesting is I kind of mentioned this past week or last week's video is look for this data set to come out. Now, down at the bottom here is it actually has Wednesday as the data set. Every data set in here is marked Wednesday. Well, I found out that it actually comes out Thursday about 30 minutes after the market closes. Okay, and it actually updates in TradingView about an hour or two after market closes on Thursdays. So we actually didn't get this updated number until Thursday after the market closed. So there's no trading that actually took place this week where we got this updated number. So it's going to be really interesting to see how the market kind of plays on Monday and Tuesday, because this number did drop quite a bit. It did drop a little bit over 4% over last week. So just kind of an interesting note here. But on typical weeks, you probably will see the market trading on Friday, responding to this number. That was just not the case this week because we have a holiday on Friday, no market trading. So we'll see what the market does on Monday. And if I do overlay the SPY on top of this, and we kind of take a look at how smooth and kind of in line they kind of trade now. I'm not gonna say they're perfect relationships, but they do trade kind of in line. We saw a lot of that pump up in January. That the orange line here is the SPY, the blue line is the data set for the Federal Reserve balance sheet. We saw a pretty good run there. Now, what's really interesting here is we saw a really strong pop here on the Federal Reserve balance sheet over the month of March. And we didn't really see a huge climb here on the SPY over the past couple of weeks. I'm not going to say that we didn't go bullish. We did go bullish, right? But it definitely didn't match that kind of intensity. Okay, and that's kind of really what I'm trying to get at. So it is just an interesting look at it, and if the market does see that the Fed's back to dropping their balance sheet, is the market then about to sell off again? Maybe like how it did back in August, right? That was kind of why August, at the end of August, we sold off pretty sharply, pretty quick. So we'll see what happens this next week. And I will be continuing to watch this data set, this Federal Reserve balance sheet. But yeah, it does come out Thursdays after the market closes. All right, so taking a look here at the Qs real quick. So, like I mentioned earlier, the Qs haven't really been super strong over the past couple of weeks. Like they've trended higher, they've broken some new highs. They just retested some of those breakout highs that we kind of had over the previous couple of months. They tested them on Thursday, Wednesday, Thursday, and they bounced Thursday. So they should have done that. It makes sense. Here's what's going to be the interesting part when we come into Monday and Tuesday on trading. Is the market going to continue to push bullish, or is this going to break down and it's going to be like a failed bounce? And if that starts to happen, that will be like a false breakout above some of these monthly highs, and it's also then going to really kind of put some pressure back on probably the bulls stepping in to push the market up. And if you take a look here at the IWM got wrecked kind of earlier this week. Monday didn't really do a whole lot, but Tuesday it broke down very hard. So it's getting back down to some of these March lows. I know it's not all the way down to these March lows, but it kind of is getting to a situation where it seems like majority of the stocks in the marketplace, and as we look here at the RSP, you'll see what I mean. The majority of the stocks in the marketplace, it seems like they're going to bring down the big dogs, right? Because the big dogs, like really only 10 to 20 stocks, are really just holding up the marketplace for now. And so it kind of seems like, the lower stocks, majority of the other stocks are just going to weigh on the stock market, and it'll be one of those situations where it might pull down the big dogs that are holding up the SPY and the S&P 500. So you can see the equal weighted SP 500 not even close to getting back up to these highs that it had back in December. And if you take a look here at the SPY, we actually took out those December highs, but we haven't really cleared them. We just barely breached above them, but you can just tell it just doesn't have the same feeling. So the weight of the top end is really all that is carrying the market right now. And over the past 2 weeks, they've even started to lag behind just a little bit, right? When we looked at that sector recap. So not saying right now is a great time to be bullish. And I know a lot of people are calling like, oh man, we got all the moving averages trending in the bullish direction. But if you take a look at past several months, this has been a major resistance level going all the way back to May of last year. We first kind of got into this zone and we didn't break above it. We've only really been above this zone for the middle of August for like 2-3 weeks. And then, and there in February, the very beginning of February, we kind of broke above it, but we very choppily came back down through it. So over the past 9-10 months, we've only been above it for maybe like 2 weeks, 3 weeks at the most. And it's not the best time to be looking to be bullish. I would say probably maybe even the best time to look to be bearish, because right above it, you got a very clearly defined kind of risk level. If you want to say, hey, I'm going to try and go bearish here. I can just put some stops up above it, because if we do break out, then we're probably just going to go on a little bit more of a bullish run. I get that, but we've definitely smacked our head here several times over the past several months. So we'll see what kind of comes of this early this next week. And don't forget, this next Wednesday, we are going to get CPI again. So that'll be CPI for March. So there's plenty to kind of keep the market moving this next week, whether it's bullish or bearish. The market should be moving pretty good this next week, because we just saw the Fed balance sheet got reduced pretty good amount. We're going to get CPI Wednesday, and then we get bank earnings actually starting this next Friday. And the market could be kind of a choppy, volatile week this next week, just because there's a lot of news coming out. So Alpha Hunters, get back to enjoying your weekend. I appreciate you stopping by and checking out what's going on in the markets. Alrighty, take care, Alpha Hunters.